And good morning, everyone. Welcome to our live trading workshop. It is July 10th, 9 a.m. Eastern. So I hope you guys are all awake. Have a cup of coffee next to you, comfortably seated and ready for some live trading. My name is Daniel. If you don't know me, I am a managing partner of tradingindicators.com. And I will be your host today. And I will also be joined today by Nicholas, who will do some of the chart analysis with me today. All right, so now you see we do have a full house. Great, it's great to see you guys attending our live trading sessions. That's really, really cool to see. And I'm greeting you today once again, just like yesterday, for our member session from beautiful Brazil. And I just want to reiterate, as a trader, you have the luxury to work/trade from anywhere, which is one of the great perks of being in the trading business. Anyways, before we get started, let me quickly ask you, where are you guys calling in from? I do see many familiar names, so please put it into the Q&A box. So let me open this one up. Let's see, who do we have? Robert. Asking a question. I'm going to get to this question in a bit, Robert. All right. Where are you guys calling in from? Don't be shy. Who do we have? Oh, Andrew, Australia, Perth. That's awesome. Amazing. What time is it over there? Charles from Beirut, Lebanon. Wow, amazing. 9 p.m. Andrew in Australia. Awesome. Wayne from Boston. Hey, Wayne. Good to see you again. Amazing. Okay, good. Perfect. Wow, truly international. Lebanon, Australia, the US, Brazil. Nicholas is in Montreal or nearby. Philly from Andrew. Awesome. Great. Wow, it's awesome. Huh? The magic of the internet, how everybody can get connected so easily these days. Who would have thought 20 years ago? All right, amazing. Cool, guys. All right, let's get started. Thank you for sharing your location. A quick reminder, of course, that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use your risk capital, which is capital that you can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not indicative of future performance, and any trade or trades taken in this live session should not be construed as trade advice. These are trades that we take for ourselves and are for informational purposes only. All right, with this out of the way, let me introduce ourselves. So I'm Daniel, the guy here on the left-hand side. And on board today is also Nicholas, as so many times. So he's going to be manning some of the charting today, and he's going to be executing the trades on our live account. And sometimes also Homa, my business partner, also joins us at these live sessions, and all together we are trading indicators. And we've built plenty of trading tools over the years. We've been out there now for more than 10 years. We've built hundreds of trading indicators. And today we're going to showcase two of these indicators, how they can be used for live trading. These two indicators are Liquidity IQ and MA Rush. All right, so we're going to try to keep it as simple as possible, and we're going to base ourselves on what's called technical analysis. We're not going to try to, interpret fundamentals. That's beyond us. We're going to base ourselves on technical analysis. But there's one thing I wanted to mention is that we do look at fundamentals for the sake of sometimes staying away from the markets. So when Nicholas is going to share his screen, we're going to first look at some economic events that may or may not be happening this morning, so we can be aware of these ones. All right, guys. And of course, if you have questions, feel free to ask them throughout the session. Please put them into the Q&A box, and we can discuss them as we go through our charts. All right. So a couple of ground rules also for today. So we're going to focus on what's called day trading. So we're going to look at short-term trades, primarily in the futures space. So we're going to look at all the popular futures markets. If we see some interesting stocks, we may also look at these as well. But one thing to keep in mind, even though we will be focusing on day trading, the techniques and indicator readings and setups, they are universally applicable. So even if you are a long-term trader, FX trader, for example, some trader of asset class that we do not cover today, don't worry, these trading techniques are universally applicable. We will also be using TradingView today, just because it is the greatest common denominator. Most of you probably have heard or used TradingView before. But having this said, everything could be also done just as well with NinjaTrader or ModifWave or Thinkorswim or some of the other platforms. But we're going to be using TradingView for today. And the trades taken, these are going to be live trades. But of course, sometimes because we have to fit them into this 1.5 hour session, we may take them just for illustrative purposes, just to showcase to you how we would look at them. And sometimes you may even be needed to force a trade or close the trade prematurely to fit it into the session. So keep this in mind, please. All right. A bit of some technicals here. We are going to be using primarily our live account, which is an interactive brokers account connected to TradingView. So if you have an IB account, IB standing for Interactive Brokers, it is very easy nowadays to simply connect it to TradingView, which is awesome. Before that, you used to load your TWS, your trader's workstation, which is a super heavy tool on your computer, very annoying, but now it has become much easier with the TradingView connection. One new thing that we're going to do today is, on occasion, we may also take some trades on our Apex Challenge account. So this is a prop account to showcase to you, because I know there are many prop traders here in this room today, to showcase to you how easy it can be done to place these trades, also with TradingView, with Apex. And one quick thing to mention, and Niklas, please put this into the chat if you can. If you use our link, tradingindicators.com, you will get a pre-populated coupon code, which will get you 80% off your prop trading challenge with Apex. So I highly recommend it to look into this. Great conditions at Apex, and we may discuss this a little bit later in this trading session. All right. So with that, one last remark. Is every trade we're going to take today going to be a winner? Of course not. This is impossible. And this is not one thing that we're striving for. There's no such strategy that will guarantee this. But what we're going to do today is to do everything in our powers to increase our odds to make it a winner. There's no guarantees, but we're going to try very hard. And some of these things we're going to do today, of course, we're going to look at avoiding major market events. It's the first thing we're going to look at. We're also going to be basing ourselves on what's called a multi-time frame pivot analysis. Sounds complicated. It is not, because this is already built into our Liquidity IQ indicator. And by simply using this indicator, you will indirectly do this kind of analysis as well. We're going to look at important support and resistance levels. I'm going to check which direction momentum is pointing to, because ideally we want to trade in the direction of the momentum, either bearish or bullish. And of course, we're going to also use smart risk management. So should we have a loser, it will not ruin our account. All right. So without further ado, and having all this said, let's get started. So Niklas, are you there?
Yeah, I'm here, ready to go.
And perfect. I'm going to allow sharing for you. Please go ahead and open up the charts, and let's look at some market events that may be coming up or may not be coming up this morning.
Perfect. Okay, so I'm sharing my screen. You should be able to see my trading view here.
Yeah.
Just move this out of the way. So first thing we want to do in the morning is we want to click over here on Trading View on the super handy economic calendar. So I want to know what is happening. Is there any event I need to be aware of today, Wednesday, July 10th? Yes, there is. We have the Fed Chair Powell speech. So this is an FOMC speech. And, when these things happen, oftentimes, depending on what is said at the meeting, I'm not sure what's expected, but there might be a major move or, a lot of volatility around that point in time and in the minutes leading up to it. So we're going to be aware of that. And we're going to watch out for that. So it doesn't mean we're not going to take a trade before it, but we just want to be aware of it and have stops and targets or a plan in place for when that time comes. So that's our first consideration. We got that out of the way. At 10 a.m., we need to be watching because there's something potentially happening. Now we got two tabs set up, and on all of the charts that we're looking at, when we're trading like this on these short-term time frames or in a short period of time, we're looking at the 5-minute chart generally, and we have liquidity IQ and MA rush applied to each chart. Liquidity IQ, we like to generally put it on the 30-minute chart reference time frame, or reference time frame to the 30 minutes. So we're getting levels from the 30-minute time frame and higher, so up to like the 2-hour and stuff. So we're able to see these longer term, more important resistance and support liquidity levels. So in our first tab here, we have a few index futures, and we're all trading all micro contracts here. And we also have Bitcoin. So up in the top left, we first of all got MNQ. And one thing I want to point out, if you have Liquidity IQ, is if you have a 4-pane trading chart like this, where I got 4 different charts going on, you can see how quickly, if I'm zooming in on all of them, or actually zooming out is a better explanation, it can get pretty cluttered with all of these different labels telling us where the resistance zone liquidity captures are. So what you want to do is double click on the indicator or go to its settings, and I'm going to turn off mentor mode. I don't need to be told where the levels are. I can see them on the chart. So I'll set this to off, and then I'm going to click OK. And I'll right click here and apply these indicators to the entire layout. So boom, that's going to turn off mentor mode, my liquidity IQ indicator, across all these charts. I'm going to do the same thing in my second tab right here real quick to get that out of the way. So come here, set this off, hit OK, and then apply these indicators to the entire layout. So these are the symbols we're looking at in here, our index tab, and also Bitcoin. We're looking at MNQ and MES at the top here. So what we noticed today, and I think Daniel actually took a trade based on this idea before we even started on MES, is that yes, we are making or trying to make all-time highs this morning on ES, but we're getting a lot of liquidity captures happening at this resistance level. And if you look at prior resistance levels like here, here there are a lot of liquidity captures, but when price comes up to a level or down to a level, look at this bounce off this level. When there's a lot of liquidity captures, or here, look at all these liquidity captures, kind of looks like what's happening this morning. We get a bounce here, we got some follow downwards. This is a sign that there's action happening at this level. There's a lot of trading volume going on right here at this all-time high, where we're trying to break to all-time highs, this level around 5645.
And Nicholas, will quick maybe go a little bit slower on the chart. At least on my end, it's a little bit sluggish, so we can follow along.
Sure thing. Yeah. My apologies. So our idea here on MES is we're keeping in mind, especially if we go over to something like the 15-minute chart and we see MA rush, I mean, look how long this has been in a bullish trend. We know that it does seem like MES and MNQ are pretty overbought at the moment, at least in my opinion. And we need to be aware of the fact that it's extremely bullish, and it's not unlikely that it's going to blast through this resistance level. We can't know. But with these liquidity captures happening here, we're kind of betting that it could be a decent reward to risk for a trade to take a short bounce. And the short bounce setup is basically, we are betting that these liquidity captures are signs that price is going to ricochet off of this level and come down and give us some room for profit. So we would like to potentially take a short trade right around this zone in this little volatility box is where we often like to enter. It's kind of like a general tolerance zone around that level where price is likely going to visit. And why this is a good reward to risk trade is, well, we very easily know where we should get out of the trade or where we can place a logical stop loss. So if we enter short here, we're going to wait till the market opens to see what happens. But if we're shorting based on this short bounce idea, we're going to place our stop just a little bit higher than where price has been recently. So maybe 5.6, 47.5. If that breaks, that's often a good indication that this thing's going to continue blasting up, maybe to 5.650 or something, and we want to exit our short trade. So if we take a short here, we're going to place a stop around here.
But one thing to keep in mind for this trade, guys, is that if you look at MA rush, it is not confirming our short break. It is bullish. You can see it right there, the bullish label. So ideally, if we want to take a short bounce, and these situations are quite rare, is if MA rush at the same time is also bearish, and then this magnifies. So the odds that this will work out. It doesn't mean that we will not see a bit of a bounce when this level is visited, but just keep in mind that momentum is very bullish, and as Nicholas mentioned, it is not unreasonable to think that price will simply blast through that level.
And keeping that in mind, like this, this goes against, what we generally say for when we're coming up to a level. We want MA rush to be bearish if we're looking for a short bounce. But because it's so overbought, we kind of have this bias. And these liquidity captures are telling us price is having a lot of trouble breaking through this level right now, which is kind of leading us towards a short bias. However, if at market open we do break through this, we're not going to go long because the short bounce can still happen. What we're going to do, I just mentioned before, if it does break through with significant power, it's likely it'll go up to like 5,650 as shorts are covering and stuff. What we will do if it breaks through with strength is we're going to wait for that zone break retrace. So if we get the break of this level, we will go long if we retrace nicely down to this level. And once we break up, then come back down, that's where we want to enter, because then we have that good reward to risk again. We get to use this level kind of as our line, our line in the ground, our line in the sand, where we can place our stop around. So if we go up, come down, we'll place a stop a little bit below it, maybe at this swing low right here. And very similar on MNQ. But MNQ, why we're looking at MES more, is that MNQ actually hasn't tested the all-time high. It hasn't made an all-time high today. MES has. It has made a new all-time high. And there's a lot of liquidity captures. There's more information here telling us a short bounce might happen, whereas MNQ hasn't even had the strength to reach it yet. And another possible trade, we're not going to take it, but it's a valid trade, is using this MA rush, these lines. You can see how the trend has followed these lines pretty smoothly, is to anticipate that we are going to visit this level and go long, maybe setting a stop loss at one of these MA rush lines. But we're going to wait for the market open. We're expecting a short bounce on MNQ or a zone break retrace, just like on MES. So that's our idea for MNQ and MES, either a long break retrace or a short bounce. Down here on the Russell, this one is a little bit different, this chart. And let's take a little zoom out here. Let's quickly look at the 30-minute. So we're setting lower highs. And let me see here. I think I have MA rush applied to a different time frame. But let me just turn off these indicators real quick so we can get a quick view. We're in a bit of a downwards trend channel. Although we are starting to flatten out and make some higher lows, we do have lower highs coming down here. So it's a bit of a bearish bias. And if we look with, let me go over to the 5-minute, with MA rush, we can see we're kind of at the upper end of a magnet zone. If we are short biased, which is what we are, we're going to be looking to short this if at the market open it spikes up into this resistance zone and we get a nice liquidity capture. So if we fly up to here, we're going to be shorting, betting that it's going to bounce off this level. And if we were to long it, we would want to wait for a retracement down to like 2050 or something like this. So we're not long biased on this one. If we were to be long biased, the time would have been like way back here. So we're going to be watching this for that short bounce. On Bitcoin, so Bitcoin's actually interesting and it's playing out exactly as we were planning, if this could offer a long opportunity. So I'm on the 15-minute chart here. And if we look at MA rush, we had a nice clean bearish trend downwards. Then it found support. It's been making higher lows. We got a bullish MA rush signal. And looking at the MA rush lines, look, it's been following them and just tapping them and then continuing upwards. And right now we've had quite a bit of a dip. We still haven't broken the bullish sentiment. And our idea on this one was this is a long break retrace, a zone break retrace. We had a zone break here. Boom, it came up. Tried to test 60K, came back down to the 58,500, what is now support, but it was resistance. And our idea was the 58,000 over under trade. So we're going to take a long on this one, seeing how things happen at the market open, expecting that we can use 58,000, which is very close to this kind of last resort MA rush line down here, 58,000 minus maybe 50 points, so 57,950 as a stop loss, expecting that we are going to make our way back over this resistance in the short term. So this is kind of almost in our nice entry area. I think we wrote it as 58,100 to 58,400 region for a potential long. So depending what happens at the open, it's a good one.
And Nicholas, a good question came in from Andrew. He's wondering for MNQ, why don't we just set a limit sell order at the resistance level, and then if price goes there, we will get filled. And the main reason for that is we want to wait until the market opens, just to, it's just to observe quickly what's going on, because the market opens typically seem to be a bit volatile. This is why we wait first, and then we will place our orders, exactly as you may have said, through limit orders or stop entry orders, or even market orders to get into the market. But we want to wait until the market is open in this case.
Exactly, to see what happens. So that's a quick rundown, and we're speeding through this just so we can get through the setups before the market open in 10 minutes. So the next tab, we have some metals, excuse me, and oil. And again, these are micro contracts. So in the top left here, we have copper. And we were watching this earlier this morning, and we were thinking this is a really good opportunity for a long with a good reward to risk, because we've had some downtrend, but then now down here we're getting liquidity captures. We had a double bottom, and normally once we have that kind of zone break, you expect eventually a retrace. We got the retrace, but now we have bullish momentum, and the retrace wasn't a retrace. We actually recaptured this support. Price broke above it, came down. Another liquidity capture, so people are buying at the 4.589 area, and you can see it's made another higher low here. I like this. We like this for a long trade if we come down between 4.59 and 4.6. So something like this region, that's a decent reward to risk trade to enter long, because we can place our stop loss somewhere like right here, very well defined beneath this zone, expecting us to maybe make our way up to the middle of this magnet zone area here. So this one's a nice idea for a long. And what we're going to do here is, before we run out of time to do it, we're going to set some alerts. So we want to know 59. So this is 59.6. So I want to know if we cross 4.5975 on copper, tell us the alert. So copper long.
And Nicholas, while you're setting the alert, Doug wants to know what is our configuration for Liquidity IQ on these charts. So we typically open up the 5-minute chart to look at the price action, and then configure Liquidity IQ with the 30-minute reference time frame.
And on ES, we're going to set an alert. Oh, whoops, I think I accidentally created the wrong alert on MNQ. Let me delete that. Yeah, I put it into the wrong field. 20,770. I want to know if it crosses that level. Cool. And on ES, I'd like to know if we're crossing 5645.5, 5645.5. On the Russell, we want to know if we're crossing 2063.8, 2063.8. And here on Bitcoin, I'd like to know if we're crossing 58,100, because I want to get a good, it has been a little bit bearish in the last 8 hours or so. So I'd like it to come down a bit so we get a better entry on a long if we take it. So 58 for 100, 140, and that's actually right here. So that's probably going to be happening very soon. Let me try to drag that alert a little bit lower. Okay. Now on silver, let me turn on Liquidity IQ. And if this ever happens, you have Liquidity IQ. Sorry, Daniel, go ahead.
I just wanted to answer one quick question. Robert was wondering what is the coupon code for Apex. I just put it into the chat, Robert. Okay, go ahead, please.
So a good tip when you're using Liquidity IQ, it's such a calculation-heavy indicator. Sometimes you'll get that little exclamation mark telling you calculation timed out. It took too long. Just open up the settings, swap the color theme, swap it back, and the indicator will repopulate. So we've run that. And on silver, what are we thinking on silver? Let's take a look here. So I want to hop over to the 15 minutes, see what's happening. So silver, very bullish in the short term, at least on the 15 minute. Let's see here, one high, lower high, and where is that high? 31.69. So we're coming up kind of, well, we are breaking through. It's no longer making lower highs in that longer term trend, and it is pretty bullish, although we did just get an MA rush bearish signal. Let's keep that in mind. Let's hop over to the 5 minute. And actually on this one, just based on the price action, I'd like MA rush to be not even on the chart time frame. I want it on the 15 minute because I think it gave a nicer picture. So let's hop over to the 15 minute. we can see, okay, we've got a bit of a bearish. Now, this is what we were just talking about before. We've got MA rush bearish.
Yeah.
And I think the good idea here is probably, I mean, look at these lower highs, even though we are making higher lows. If we come up to here, I would like it more for a short bounce than a long trade. But we'll see what happens. It is above all of the MA rush lines. I'm going to give us an alert there at 31.4.
Yeah, it's
level.
compressing a bit, so making higher lows and lower highs, but so it's getting really compressed. But yet, if we reach that level, we may see a bit of a bounce. But you have to just be aggressive when we take our profits here.
And yeah, and I think it'd be a good looking at it longer term. Let's take a look at the 1 hour to see where we're at. That, to me, this doesn't look like a good short bounce idea. When I look at the longer term, it looks more like a bit of a breakout opportunity. So we're going to keep that in mind. Okay, and when the time comes, once we cross our alert, we'll see what's happening. If we break these pivots right here, these levels, maybe we can grab a long and see what happens and set a tight stop. And if it doesn't seem to be playing out, maybe trade this short bounce. On gold, gold has been really bullish this morning. Daniel, I know, took a really nice trade from somewhere down here, rode it up. MA rush is bullish. We are above a zone here. It's not really well defined. It's not a great entry here.
Actually, the trade I took is, we saw this break above the resistance zone. I was waiting for the retrace and then was running up this little move higher. One of our classic trades, the zone break retrace. It was not the cleanest break and retrace because it was kind of hovering around that level. I still took it because MA rush at the same time was bullish early on this morning when I woke up. So I took that trade for a nice profit. Yeah.
And I think what do you think, Daniel, on this one? I'm thinking if we come back for another retrace to try a long.
Absolutely. Could be another one.
So we'll set an alert there.
Even a bit of a cleaner retrace because now we actually well defined above the resistance zone. If you come back to support, it could be another nice entry for a high reward, relatively small risk trade.
Definitely. And on oil, so oil, if we turn off our indicators for a second, and we hop over to the 30-minute. So oil has been on a tear, so it had trouble breaking for the past couple months, the $80 mark. Once we came down to 73, we flew up through 80 and we made it all the way to 84. Now there's a retracement. We see we're in this zone with a lot of action right now. Over on the 5-minute, let's hop over there. We do have this break down through here, through this support, and we've had retraces up to it multiple times and price has continued downwards. So it's likely that a lot of the levels in the past couple months were between 80 and 81. That's where the pivots were. It's likely we'll visit the 80 to 81 zone, potentially. MA rush went bullish here, but it's not really holding up. I like oil for a short trade, but we don't really have any zones near us, like a zone below us, at least on this time frame, to reference. So it would be a little bit of a risky short trade, at least for basing our reward to risk based on liquidity IQ. But if we do see a little bit of a move upwards to these pivots right here, the 81.50, I think it's a good, really tight stop loss short because we can retrace back up to here real quick. It's a decent short opportunity to maybe place our stop somewhere in this region and take a short at the 81.50 area, expecting us to come down to something like 81. So let's take a alert here, 81.45. So we've got our alerts set and 30 seconds till the market open. So we're all set here. We have these two tabs. We're watching the indexes and Bitcoin. And in this tab here is our trading tab. Let me just move the Zoom box. Okay, so we've got our trading tab here. Over here, we have our trade panel open. I'm logged into Interactive Brokers on Daniel's end. He's logged into an Apex account. And yeah, now we're going to wait and see what happens at the market open and, act on our alerts.
Yep, let's see. And let's see if we do get some volatility when the market actually opens. So it is open now. Things are calm. I guess things, you know, are waiting for the meeting at 10 p.m. Maybe we'll stay relatively calm leading up to the economic news event. But let's see what happens at the open.
So
We do see.
here we're going to see what happens. We get a liquidity capture. We want to enter in for a short. So I'm going to just get this ready and we'll jump in, let's say at first with 3 units. And we're going to set a take profit. Doesn't matter at the start. We can adjust that. Our stop loss, though, we want to place our stop loss a little bit above. So let's say 5649. Let's see what happens right here. And we got a liquidity capture. What do you say? Go short, Daniel?
Yeah, let's do it.
All righty. So we hop in short right here, send the order. Up, got a little bit, whoops, daisies, a little bit of an entry away from where we were watching it, but we've got our trade in place. Our target's all the way down there. Doesn't matter where our target is for the moment, but we've got our stop right there. So let's let this go on. Let this trade play out. And depending on what happens, we might scale in a little more, but for now, we'll leave this. We'll be conservative here. And let's hop over to our alerts. MES, our alert was triggered, so I'll delete that. Every other alert that we defined has not been triggered yet. So we're going to wait to see what happens. And like we said, if this does break and we come up and hit our stop loss, the next thing we're waiting for is the retrace, because we're making all-time highs here on MES. And shorts aren't working out this morning or the past couple weeks. So if we break up through here and hit that stop, we're going to be waiting for a retrace to enter in the opposite direction. So let's check our charts here. MNQ experience, look, nice liquidity capture on MNQ. It actually visited that zone we spoke about, touched it, liquidity capture, beautiful bounce, coming down quickly. That's like a textbook bounce play. And depending on the amount of contracts, might be exiting, right here for a profit.
And the reason why we didn't go into MNQ at the same time is because they are often correlated, guys. So we don't want to overexpose ourselves. ES, MNQ, very similar setups, entering both in the same direction. It may not be the best idea, but as you can see here, beautiful bounce off, and maybe even opportunity to lock in some profits, at least to break even at this point.
And I want to, Daniel, if you can tell me, maybe in TradingView right now. Oh, it's because I've got the modify order set up. Okay, so now I can drag my entry. So we want to be smart about this, right? We're not going to be greedy. If we come down to here and, at the market open on the 5-minute, we often have a big boom candle like this. And then who knows what happens next? We're going to have another candle twice as big in the opposite direction. So when we come down to these pivots, these little zone of action here, I want to be getting out because that's a likely area for a bounce if a bounce does happen down there, if it doesn't happen earlier. And I don't want to wait for us to come right there. So I'd like to place our our target above that. I want to anticipate us bouncing off that region. So we're going to leave our target right here. And our other alerts, nothing has happened. Let's take a look at
maybe
Bitcoin.
move to stop also to break even, just to
good idea.
lock in, because why not move to stop to break even? This at least gives me peace of mind, because whatever happens now, I'm protected. We already have a bit of a profit. Let's move it, and let's see what happens. And if you get stopped out, then be it. But at least nothing can happen at this point. Yeah. Even though
lower, no, yeah.
No, well, I think it was fine there. Yeah.
Yeah. Okay. 5, 4, 6. I want to put it a little bit because we did get filled below the volatility area. We entered market, so I don't want us to get stopped out prematurely. So I'm going to put it right around the level itself, like the line.
Yeah.
So we'll let this play out. I want to take a look at what's happening on Bitcoin. So if you know Bitcoin, not always, but oftentimes, if there's a lot of volatility on the indexes, like NASDAQ especially, Bitcoin will follow it. We're waiting for that signal, which we're getting really close to. Bitcoin is only 70 points away from our alert. And be watching this for a long, but I'm not going to go long on Bitcoin if NASDAQ's crashing, exponentially, or it's parabolically dropping downwards. I'm not going to do that because there's probably going to be some correlation and Bitcoin's going to continue down a bit. This is interesting. Look, the other index are hopping down. Look what the Russell's doing. It's coming up to our alert here in the resistance zone. So we're definitely watching this for that short bounce to see what happens. Okie dokie. What else we have? We have copper. The metals are not affected by anything happening on those indexes at all. We're watching this to go for a long down here. Gold, we're also waiting for us to come down to hit a long. And oil, well, we got all our alerts, right? We've only had one alert get hit. MNQ actually didn't even touch our alert, did it? See? And we come down here. Hopefully we hit our target and don't get a one tick miss. But let's see, MNQ. Yeah, look, it came up. We set our alert, didn't touch it, but that was a very nice liquidity capture. And it's rare that you only get one liquidity capture. Okay, we hit our target. Oh no, we got an alert and we hit our target. All right, so we made $66. And where is our alert that got hit? Bitcoin. So like I said, look at this. It's dropping because the indexes are dropping. So we're going to see what happens. If these indexes start to show support, let's go along here.
And guys, because of sometimes Bitcoin, you may not think so, is correlated with the indices. It is also wise for Bitcoin to wait for the market open to see what's happening, because that typically decides, at least for the beginning of the market open, where the direction will be going. And since there's a bit of correlation, even though you may not think so that Bitcoin has anything to do with the market open, there is some correlation, and it is also wise for Bitcoin to wait, see what the market is doing, and then enter into it.
Yeah, definitely. And I'm going to use a little hand emoji here just to point something out. Find this. So, all right. So see how these liquidity, whoops, daisies, these liquidity captures here, look at how they kind of rounded price off. So it's kind of like a stop, it's telling you, hey, things are getting a pause right here. And you can see it hits it and we get that nice curve right downwards off the level. So that's what a great way to think about liquidity captures. However, why did we take our profit real quick? Well, MES, let's not forget, is super bullish, right? Especially on higher time frames. Like let's look at MA Rush on the 15-minute. This thing's killing shorts. It's just flying upwards. Even MNQ, if you haven't noticed, in the past, daisies, couple weeks, I believe, maybe a couple weeks, MNQ has not come down, hasn't had a drawdown of anything more than this one right here, which was from 760 to 130 points is the most it has ever retraced since July 2nd. So since we broke 20K, it has not taken a breather of more than 130 points. So it's super bullish, and shorts are in big trouble on MNQ. So that's why we're taking our profit real quick, because it's not unlikely we're just going to blast right up very soon once again. So on MES, we hit our target there, which was like 55,641. And now if we placed it, what did we say before? We said, we're going to place our target above this zone of action, above these pivots. We're going to get out before all the people that are waiting. There's a lot of people that shorted here. They're waiting for price. Hey, it's going to come down and lose this zone. We're not greedy like that. We're going to exit our trade before. That's why we placed it a little bit above that. So we get out before all the people that are covering their shorts right there. Look at how that lines up with those pivot highs. So we got out conservatively because it's the market open. We're not even 2 bars into the day. And this can very easily just snap right back up. And in terms of it being a very bullish long-term, we're not watching this for a short right now, unless maybe it comes back up to the zone, we get another liquidity capture. But even then, once you have the first round off of a zone, it's just, something we observed. Once you have this first bunch of liquidity captures that lead into a short bounce, like a bounce off the resistance level, if it comes back up and you've had all these liquidity captures, well, now that's not a bearish sign, because even though there's all this selling pressure with these captures, price still is coming up and visiting it again. That's bullish. And a level that gets too many liquidity captures eventually gets broken. So we can see that happening right here, for example, on Bitcoin. Capture, capture, and then boom, it breaks it. A
good analogy for this is that imagine you have an ice pick in your hand, and every liquidity capture represents like you're hitting on the ice. You keep hitting on it. Eventually, the ice will break, and it's a bit of the same here. So as a resistance level gets revisited over and over again with liquidity captures, eventually it will break and price will blast through it.
And when you hit ice with a pickaxe, what happens to the pickaxe? It bounces off of it. But if you keep hitting it enough, it breaks. So here on Bitcoin, now we're going to be watching that for a long, depending what happens on the indexes. I don't want to go short here because we got the perfect opportunity here, right? We got the liquidity capture on MES and MNQ. We took the short. Now, if we're going short, we're kind of late to the party. We're exposing ourselves to that whole move back up. So if we want to go short again, we're still short biased, which I'm kind of not. We're going to wait for it to come all the way back up because we want to get a good entry and we want to keep our reward to risk reasonable. And you can see here, look, this low, so low, 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 and now this low right here is another higher low. It's kind of making a trend line, even though it's volatile, it's the market open, so it could still be very bullish. On Bitcoin, I don't think, I mean, we did have a zone break retrace. This could be a good opportunity, Daniel. Do you want to take a small long right here? Or do you want to wait until the indexes make their opinion more clear?
I think I want to wait, especially also since the FOMC meeting is starting soonish. This setup may not be as clean as I want to be. I think I'm going to be sitting on the sidelines for Bitcoin futures.
Good idea.
And the reason is because it doesn't line up as clean as I would like to see it. We have bullish momentum. We are below a resistance zone there where price may bounce off from. So going
long
long there.
That's not a clean retrace. It broke it.
Yeah, it broke it. Yeah, it's not. You know what? In trading, sometimes you don't force a trade. You just
Daniel, you cut out there for a second.
Oh, sorry. This is must be. This is one of the drawdowns from trading remotely. Sometimes your mobile hotspot may not be as solid as you may think. Nicholas, are you guys?
Yeah, we can hear you now. You were saying, yeah, it's not a clean setup, and when this kind of stuff's happening, you don't want to take it, right?
Yeah. Exactly. So I would not force it, especially coming into this meeting, which brings in unpredictability. But let's go through the symbols one more time. Let's see what we have. Maybe we find something clean along the way.
So I think copper is super clean if we come down to here. It's having some trouble right here. So, it might blast up. And the opportunity, I mean, we were starting our analysis at like 7:50, 8 o'clock. The idea was still the same, and the good entries were back here. But if we come down, still a good entry, very good reward to risk. And we already have a winner in the bag, and we got that trade. These opportunities come often, but maybe they come a couple times, few times a day, like this type of perfect opportunity. We don't want to be forcing anything. We waited patiently for the good opportunity. We got it. Now we're going to, sit on our hands a bit and wait for another one. So what happened here on oil? Oil, we didn't come up and hit our alert. But what we expected is probably going to happen is starting to happen. I think we are going to come down to something like 80.70. We'll see what happens. I'm saying 80.70 just because I watch this symbol a lot. And I know that in the past couple months, 80.70 was a super popular area. Like, look, right here is 80.70 in between this zone. And way back here, 80.70 or 80.60 made a lot of pivot highs and resistance levels in the short term. Here we see it bouncing off the 80.50s. So I really like oil if we do come up to that level and hit our alert. Copper, we've got our alert set. On silver, we set an alert for a short bounce. We haven't done anything. Gold, it's still bullish. We don't want to chase it. It has moved a lot. It's up 40 points or 30 points off this one capture. And we had some captures here. I really like to trade off liquidity captures. All right, NASDAQ is coming back up a bit. The Russell, look, we didn't hit our alert, but it's doing what we expected. And look at this. It came up to this old pivot high right here, blasted a little bit above it, and now it's dropping. So it's doing what we expected. That at least backs up the methodology, but we didn't hit our alert. That's not the end of the world. I don't think we're going to be getting a short opportunity in the next hour on the Russell, and we're not about to chase it. So here, so the NASDAQ's coming up a bit, but MES, normally MES and MNQ, or sorry, NQ and ES follow each other really, really closely. But I noticed in the past couple of weeks, there's a little bit of a divergence between them where the correlation isn't as strong. So normally on a 5-minute chart like this, if NQ is blasting up like this, the candle on ES will almost always look like the exact same. But ES has actually been kind of more bullish than NQ recently. And right now, it's not following it exactly. You can see it's having a little bit more trouble being as bullish as NQ, or it's having trouble being as bullish as NQ, but we are still seeing, what we expected. It might be coming back up to here. And if
Nicholas,
it does,
sorry to interrupt you. After your thought there, can we look at simple ZM soybean meals? We have an interesting thing happening there right now as we speak.
Yeah, let's go to it.
Yeah.
Oh, I'll finish. Yeah, the idea here. So back on ES and NQ. We're not about to go short here because, like we said, we had the perfect opportunity. Now we're pushing our luck to go short again. I'm expecting a break potentially, and then we might get the zone break retrace, and we're going to wait until after that FOMC.
And guys, if you looked at the index futures, ES and NQ often, you notice they are a bit schizophrenic sometimes, where in the morning price drops down, then end the day with 30 points in the profit or whatever. So that's a bullish price going up again. So I think, or I have a feeling that we're gonna see something like this for MES and MNQ today as well. Price is gonna break through that level. We had our opportunity, but once it's broken, we can either go long on the break or wait for the retrace. So two things that can be of interest there.
Yeah, and right here, another little nice bounce right off that zone, a couple points. Like Daniel said, yeah, the market opened too. You see here, look at this crazy action. That's why we got in. We got the hell out real quick. Once the morning's over, once we get to like noon and stuff, we tend to hold trades longer and be a little bit more, less size and wait, more patience. But in the morning, you want to get in and get out, in my opinion, unless you have a really wide stop. And you're expecting a bigger move, you're trading with a different risk tolerance or sizing. But yeah, it's, the morning is very unpredictable. So here on ZM, what do you see, Daniel? So I'm on the 5 minute. I just want to see the 30 real quick.
I see a nice zone break to the downside, waiting for the retrace back to the broken zone to enter short.
Great idea.
That was my idea there.
And that's
the zone break.
And look on the 30. We're on it's a downtrend, like lower. Wow, big downtrend. Lower high, lower high, lower high. Retrace short. Good idea. So let's hop over here. Let's put an alert. And where do we want to see that retrace? 343.2.
Yep.
Add that alert in. 343.2. Only once. So,
and since this is a bit of an exotic symbol, guys, later on in this session, I think maybe during the FOMC, when we want to stay away anyways, I'm going to show you guys how you can figure out what actually does it mean to trade this symbol in terms of position sizing. What does a point move is in terms of dollars and so forth. So, because this may not be obvious for symbols which you may not be familiar with.
And another point I want to point out here on Liquidity IQ is as the volatility of bars increases, so as the size of action of bars increases, that basically means, price action is much more volatile. And this zone, this box, is basically a tolerance area around a support or a resistance level. And as volatility increases, the box gets wider. It's like a function of average true range. So basically, the more volatile price is, the less you can expect it to just come right to the level and touch it. The more volatile price is, the more likely it is it's going to go above it, maybe to 360.2 before it bounces off. So whenever price is within this zone, it's possible to get a liquidity capture. And that zone gets bigger or smaller depending on volatility. And the nice thing about this zone is you can use it to gauge a stop loss. So if we come up to here, you can see we got more volatility. The box expanded a bit. If we come up to this zone, we get a retrace. The retrace might go all the way up to here. When we enter, we can use our stop loss, just as a rule of thumb, right above this little box here. So we place a stop right here. It makes it really easy to tell you, hey, price might fluctuate within this zone based on the size of current candles. Don't place your stop. If you go short here, don't place your stop on the line. That's foolish because price is probably going to fluctuate within this box. But what we do more than that is we consider the box. We also consider local pivots. So Liquidity IQ is also based on pivots. Back here, if I looked for, MNQ is going up, it's bullish. On this chart right here, if I went to place a stop loss, let's say we didn't have the box, I would think, well, okay, we broke through this support, which is based on these pivots back here, which showed a lot of volume. I would like to place my stop a little bit above those. So price might come back and retest them. They used to be support. Now it'll test them as resistance. Maybe place my stop somewhere like right here. above those pivots to give some breathing room. And our box goes actually above those, and it goes actually to right where my mouse just was. So that would be a nice place to place a stop. And you can see price is tightening. The current candle's small, and these candles are way less big than these ones, right? And the box got smaller because volatility is slowing down a bit.
And one way to see this really nicely in action, how these boxes increase or decrease in size, is the replay mode. So Nicholas, maybe you can go real
Sure thing.
quick on the
Yeah.
symbol to replay mode. Just observe the size of these boxes as they change over time as we blast to some candles here.
So let's go to replay mode. So we're going to have a very small box here because look how tight price is. These are tiny candles. And what happens here? Calculation timed out. Okie dokie. Let's hop over to Cosmic. On some symbols, the replay mode, because such a heavy indicator, Liquidity IQ, might have some trouble calculating the replay mode with memory requirements. Okay, so it worked. So here, the nearest support zone's right here. Look how tight that volatility box is. It's very small because volatility is very low. Right here, very low volatility. And we're going to see as the bars get bigger, the zone gets bigger because we're probably not just going to touch the level. We might drop through it a bit. And look, as the bars get increasingly more volatile, the box gets bigger, and boom, once it got really big, the zone really widened. And we had a liquidity capture here. People were trying to buy or people were selling, and the zone break followed. So let's hop out of replay. And I want to hop over. This is nice. It looks like, oh, for a second, it looked like it was slowing down. Maybe we'll get that retrace. Oh, no slowing down. And over here, NQ. So second liquidity capture. So right now, we're not going to do it because of FOMC, but another liquidity capture. Now on ES, we had a bunch of liquidity captures. So it's more likely, in my opinion, or according to the indicator, this level is going to break and we're going to be bullish, blasting up to 5,650 and beyond. But NQ, this is only the second liquidity capture. So this is kind of a nicer short bounce hypothesis than right now on ES. But we're going to wait for the FOMC to see what happens.
Yeah, and the reason why we absolutely want to wait for the FOMC is I think, I don't know when it was, Nicholas, maybe 2 months ago in one of our live trading workshops, we did not check the economic calendar. It was an oversight, and then we're trading right into it. And yeah, a huge candle happened. As a result, our stop was taken out, and then yeah, we lost that trade, even though the trade direction by itself was good. But because we placed a stop loss, we got taken out because of a huge candle. But in the end, this trade would have been profitable had we not placed that stop so tight.
Yeah, so, like oftentimes, yeah, it will. You're right, but there's so much volatility that you get stopped out.
That's right. You can be right on the direction of the trade, but a huge candle would just take out your stop, and then yeah, you end up with a loser.
And yeah, and when these meetings happen, I think on that day, I remember MNQ. Like, look, it's very tricky in markets. You got to be really careful because look at these candles, right? The average candle, maybe this. Look at this one. This is like the biggest candle we see here, from here to here. That's a 40-point candle. Okay, that's the biggest one. Most candles are like 5 or maybe 2 to 8 points in size. But when one of these meetings happens, I don't know if this is an important one coming up, the candle can be 150 points in, a span of 50 seconds. So you really want to wait for these events to pass if you can't withstand that. Okay, so the indexes are pushing up against this level. So everybody's kind of, the longs are on the sidelines waiting, hey, we're going to get the breakout, and the shorts are praying that this level is not going to be broken and we're going to drop down at the meeting. We're not going to be gambling like that. The indexes are coming up and the Bitcoin's coming down.
One interesting symbol to watch also while we're waiting for this is NG, natural gas. That one is just testing a support zone right now. We may see a bounce.
And before we go there, Daniel, I just want to look because a lot of interesting stuff's happening here. Gold's taking off. All the metals are taking off right now. And I don't know how FOMC can affect metals. We're going to see. But look at copper. We were talking about, we said that copper was our #1 long pick this morning. Too bad we didn't get the entry we wanted. Happens, but look at this. That's a big move. And on silver, nice, liquidity capture right here.
Yeah, could be a nice opportunity to go short there. I just don't want to do it because of the meeting coming up.
Exactly.
Any tight stop loss might be taken out. And, these kind of trades, particularly for a short bounce, the idea is that you have a really great reward to risk ratio, which of course requires a tight stop loss. Not the best way to go into an economic news event, because a tight stop loss will not work with big candles. It will be taken out, most likely.
Yeah, and MA Rush here on the 5 on silver just went bullish, and we blasted up. I really look at copper; it's just taking off. These both right now, to me, are looking like really nice short opportunities. Look on the 30-minute here on copper, bearish momentum, some lower highs. It's testing this old high right here, and we're getting a nice liquidity capture in this very well-defined reward to risk area. On silver, if we hop over to the 30 minutes, same exact chart basically as copper. They're both doing well, but they've recently had this little triangle forming with these lower highs and a bullish move. Silver, like we said, when we really zoomed out, I think to like the 2 hour, it is very bullish, and it looks like it's probably going to break over 32 in the midterm, like on a swing trade. But let's watch this, because I really like the fact that it is a good reward to risk trade. So we're going to wait until after the meeting, a few minutes after, and we'll still have time unless it drops immediately. But these are good short opportunities right now. Copper, very long biased, but I mean, look, that's a big move. And look what happens after big moves a lot of the time. Even zone breaks, there is some retrace. We're too late to go long, but these kind of moves are rare, right? Here was one like this, and eventually there is a breather. No, this one was very bullish, but in the current conditions, I think there's going to be a bit of a pullback in the near term, even though it would have been nice to go long. But hey, the people that did go long eventually need to sell, and we're at a liquidity capture. So we're going to see what happens. Maybe we have some questions. Sorry, Daniel, go ahead.
Yeah, somebody just mentioned the actual big FOMC meeting is a couple of weeks away, but I think there's still something going on today. Powell is speaking on the topic of FOMC. It might not be the actual meeting. So there's still potential this will rock the market. So we're going to still, regardless, stay on the sidelines, especially since this event is ranked as high impact by TradingView and other sites as well. So we want to wait a bit.
And the closest we've got to an alert right now is oil. We're going to wait for the FOMC, but hey, there's that short trade that we were thinking about.
And please open NG real quick.
Yeah, that's right. Yeah, natural gas. Daniel, great find here. Hopefully it retraces during the session. Okay, natural gas futures. Are there micro natural gas futures?
No, there actually is. No.
Nat Gas Mini, but it's on this Indian exchange. I think that is.
It's MNG, the first one. Look at this. We have it.
Oh, whoops. Okay, there we go.
Yeah.
Alrighty. So let's I want to take a look quick on the 30 to see what's
up. It looks a bit cleaner on the mini contract, a bit more liquid, but we can also still see it here. It is.
Wow.
Yeah. It is bearish.
That's crazy.
But momentum just changed to bullish recently on the longer time frame, and we are right in that zone of support, which has held up in the past quite nicely if you look back a little bit. So I was thinking this could be a nice scalping opportunity. Let's see what happens at the meeting, but this was a major swing point at times. Now we're right back there. Nice long bounce set up of potentially a tight stop loss just below that support zone.
And look, nice thing right here. Look, a good idea. Long stop, 2.321. That's 2.321 right down there, 2.321. So we're going to place our stop there, and we can place our target. Well, we're not going to place it all the way up there, but yeah, that's a good idea. I set MA Rush to the 30-minute because you said, it has gone bullish on the longer time frame. This is the most support that this symbol has seen, the most higher lows it's seen since when? Since probably June 24th or June 23rd. So definitely some support happening, and look at all these liquidity captures. So this might be after the meeting, might be a good long bounce.
Yeah, and from a long-term perspective, this symbol right now is consolidating after this huge bearish move that we have. And phases of consolidation can be opportunities to scalp some nice trades, because things will be sideways and bounce off the respective support and resistance zone quite often. So I think from this point of view, it can be an interesting symbol to go long should we not see any crazy moves at the FOMC.
And Daniel, if we do take this, maybe you have, maybe it's tradable. It's not tradable on the Interactive Brokers account. Maybe it is on the Apex account.
Yeah, I'm going to move over to that. Yeah.
And let's just wait for the 10 o'clock. So let's see what's happening. Oil, oh, look at that. One tick away from our, yeah, look, 81.45. Our alert was 81.45. It didn't cross it. It just touched it. So that was good thinking. We'll see what happens. All right, so the meeting's happening now, or it's starting up. I don't know how long these meetings last. What is it, 15 minutes, 30 minutes? But people usually start acting shortly into it. Look at this. We're getting exactly what we thought might happen. I'm kind of thinking, Daniel, the best trade, look at this, just like we thought it would happen. All-time high right now. This is an all-time high that we just made a second ago.
That's ES, yeah. So ES, honestly, I would be inclined to either go long right away off the zone break with a stop below the broken zone, or we wait. If you want to be conservative, guys, you wait for the retracement. And maybe this is what we should do, especially since we're in the meeting. So let's give it a bit more time. See if we see a bit of a breakout, the retracement back to the broken zone, and then enter long potentially.
And something with the liquidity IQ. Notice that even though we went above it, there's no zone break signal like this arrow. Why? Well, because the zone break signal only occurs once price literally gaps up over the level. So the next bar needs to open and finish with its low above this resistance level. That's a confirmation that, hey, we're really breaking this level. It didn't give us a zone break because price was struggling. We didn't get a zone break. So we need that zone break first. Sometimes a signal doesn't come and price does come up, but I'd like to see a zone break and then a retracement. And we can see, look, that so far it wouldn't have been the wisest long just yet. I want to see the next candle open above, and then maybe if we get a little bit of a retracement down, then we enter long. And we don't need to wait. We're on a 5-minute chart. The session would be over right over here. We don't need to wait for 30 candles to occur. If we get a break and then, we wick down, it's still a good idea for a long. So let's hop over to silver and copper. So right now, I kind of like.
I like silver too.
Yeah. For a short bounce. Copper too, though. Copper's more overextended.
More copper, yeah, exactly. So maybe we can do a quick.
Yeah, let's do a quick one on copper. MHG.
Let's enter by limit order to get the entry that we want. Because for these kind of aggressive trades, you really don't want to be slipped. You want to get the entry that you want at your price with the stop loss, with the risk reward that you anticipate. So perfect.
4.65, 4.65. Yeah, let's go 4.65. And I'm not sure that that's a good point to talk about the contract values on this, but let's just hop in with 2 contracts so we see how much risk that gives us. Take profit, don't have to worry about it. We can modify the order. And our stop loss, we want to place it
higher. A bit higher.
Right above this, eh? Yeah, 4.6. How about 4.6595?
6.66. Yeah,
okay. 4.66. Oops, it is.
That's
4.66. Alrighty, and we're going to sell that.
And that's just $68 of risk. So very well-defined Canadian dollars even, since our interactive brokers account is in Canadian dollars. With a nice reward risk ratio, you can see the difference. We're risking $68 to gain $255. So that's exactly what we're trying to do.
A nice trading tool for that too in trading. In Trading View is the short position tool. So you can click it over here and you can place, hey, if we entered here and we placed our target, I would like again, we're expecting us to come down to a pivot. That's what price tends to do, but we want to get out before it goes there. So we're not the sucker that gets a little too greedy. So if we placed our stop loss here and our target there, that's a reward to risk of 1.81. And yeah, so it's a good tool to see your exact numerical reward to risk.
Even though our reward to risk is even better because we are using a limit entry. We're waiting for yet another retracement back into the resistance zone, getting the fill at the price that we want. A great way to further improve your entries and your reward risk in the process.
Definitely. Yeah. So here, MES. Oh, there we go. So what we thought might happen, and here, we're not going to do it right now, but I would probably be going long here on Bitcoin. I don't want to spread ourselves too thin right here, our focus, but the indexes are showing a sign of continuing upwards, and Bitcoin is making a higher low in this little thing, and we have the MA rush line down here as a nice little trailing stop idea. Another thing that's really nice, because it's how the human brain works, is look where price is. It's at 58,000 exactly. So you can play the over under kind of. That's what a lot of traders do. They look at 58,000 or 59,000, and the longs hope we're going to hold 58, and the shorts think we're going to break it. And it makes it really easy to manage your reward to risk or the concept of a trade. So here, look at this. Right now, that zone break signal is here because this bar, the low of this bar, is above the level. So we've gapped up above it now. Same thing on NQ. But if the low of this bar, if we wick down to here during this 5-minute candle, that zone break signal is going to go away because now it's showing we're struggling to break that level. Only when the bar closes is that going to stay permanent. So we're going to get a zone break here. If we do come back down, we're going to take that retrace long, maybe for like 1 or 2 contracts because it's still at a very risky point in time. We don't know what's going to happen here, but look, they're both making all-time highs right now.
Let's look at ZM, soybean meals, one more time.
Sure.
Price seems to be flattening out, and it's just another trade idea that you can play here if you, look at the 5-minute. There we go. And the chart also.
This should actually be chart. Yes, and the chart on the 5.
Okay, so it's a hunch that I have, but oftentimes after a zone break, you will get the retrace. And one thing that you can do in those cases is actually bet that the retrace is about to start. So what you could do here as a contrarian move is to actually place, we're not going to do it, but a long trade all the way up to the broken zone. It's it's by experience. We've seen this many times. You can see the price is flattening out a little bit. Maybe sellers are booking profits at this time, and price may, as a result, be pushed up a bit higher towards the broken resistance zone. So let's see how that plays out.
And this is also, like you said, it's very risky, but it's a good reward to risk trade again once you get those pivot lows in, because you can place your stop based on them. Once we're in these candles, it's like catching a falling knife. You don't want to be, trying to anticipate, hey, it's going to bounce here. Look, we haven't even had a green candle. There's nothing to base our risk off of. And it looks like we're actually going to get stopped out on our copper trade very soon. Price is still continuing upwards. That's all right. Silver is a lot weaker. So silver might have been the better short trade, but we're going to let it play out.
Yeah, well, that's the thing, guys. So with these trades with a big reward to risk ratio, you will get stopped out because you're playing these very aggressively with a stop loss just above that zone of importance. Of course, these zones may get broken, but if they get broken, we only lose a little bit. That's the beauty of it. And if we are right, we can gain a lot. But let's see what happens on copper.
And you can just look at any chart. So 1 second, let me come over here to our open chart here. Okay, so yeah, there we go. Look, we could have anticipated a break retrace and placed our stop here, and maybe we would have got stopped out soon. Maybe it'll bounce. But the good thing about liquidity captures, so let's hop over to, or you know what? We are trading on copper right now. So let's look at a copper chart. You can just look, and that's the whole thing with liquidity IQ, right? It's based on patterns. And it's not an indicator that tells you buy here, sell here. It just gives you general setups and a general idea of what might happen. And let's look at all the times a liquidity capture has happened on this chart. What happened after a liquidity capture? Liquidity capture, bounce. Liquidity captures, bounces off that area. Let's find another one. Liquidity capture, short-term little bounce right there. Come back here, see if we find another one. Liquidity capture, price ended up bouncing up off that level. What else do we have? Another liquidity capture right here. Liquidity capture, bounce. Liquidity capture, it broke. Okay, that's the first one we saw where there wasn't a bounce. And here, this level, price tried to break it, multiple zone breaks, and eventually it did break it, which is what we were kind of saying when there's a lot of liquidity captures, price does tend to defeat the level. Here again, liquidity captures, bounces. So it tends to work. And just look at the chart and look at the indicator. If it's not working on that chart and they seem to have no significance, then maybe don't care about them so much. But betting based on what has historically happened or seemed to happen, the pattern you see, it's a good way to keep your reward to risk high. If you have a 2-to-1, if you have a 3-to-1 reward to risk on every trade you take, you only have to win 1 trade for every 3 trades you lose to break even. So keep your reward to risk high, and that'll allow you to have, 2 or 3 losers for every winner and still be profitable.
Exactly. Yeah. Let's see what happens at the MES. Do we have any? Well, copper is, it's there in this zone. If it breaks above, we get stopped out. If we see the bounce, we make some profits. We'll see. There's no reason to obsess about it. And guys, one important lesson is that whatever you do, you want to trade small. So if you get stopped out, it's not the end of the world. It's a small portion. This will allow you to make much better trading decisions, which are not based on fear or greed or whatever. They just need to be logical and, follow your trading plan. And this will only work if you trade small, based on your risk tolerance.
I'm curious, Daniel, I've never really checked this out. Is there any correlation between indexes? So let's look at, let's say, ES, and let's look at silver. Is there a correlation whatsoever between these indexes and these metals? Let's take a look. Maybe a little bit. I mean, you have this kind of matches up here with this. I'm just trying to see if they follow the indexes at all. Hard to say like this in such an imprecise way. Do we have any other symbols we can look at, Daniel? Here, we got the zone breaks happening on the indexes.
I would love to see now. Now let's set an alert there, Nicholas, for a retracement back to that zone. That to me is a golden opportunity to re-enter long. With a tight stop loss just above, so it's just below the broken zone, which will act now as support. If we see that retracement, let's go long. Now, I do have a hunch that we will close out MNQ and MES both positive for the day, even though we did have this bit of a bounce in the beginning. But as I mentioned, these markets are often schizophrenic. What happens at the market open may be the opposite of where the symbol will end up.
So here is our copper now. Oh, whoa. That's our MCL. Everything is kind of going up right now. I'm not going to be short biased just yet on oil. We might see a little bit more of a retracement up to this support zone. All the metals and all the indexes are going up. I'm sure there's no correlation between oil and those, but just to be conservative, we are far away from the nearest zone. Liquidity IQ has not identified a more relevant level. I mean, look how long-term this has been a relevant level, the 82.5 region. It's acting like a magnet. And actually, look at this. This is super rare. A resistance and a support level are overlapping. So this level is like a double important, and price is probably drawn to it. And if we look back, Liquidity IQ, the levels expire eventually, the memory of them. But look where price bounced. It bounced off 80.80. We keep our mouse around there and come back. Well, that was pretty close to this old support level that Liquidity IQ found. So it's good sometimes to zoom out or scroll back to get some ideas of other levels that might be important. We could have used that as a clear bounce area.
And guys, you may wonder, how is this even possible that a support zone is at a similar level to a resistance zone? Well, this is the way how Liquidity IQ calculates these levels. So resistance zones are always calculated based on swing highs, whereas multi-time frame swing highs, where support the zones are always calculated based on multi-time frame swing lows. And sometimes, just by draw of the luck, they just happen to be at similar levels. This is why you can see this sometimes.
Yeah, so this was a support level. Price came down. It was a volume significant pivot low or multiple pivot lows that defined an area. Liquidity IQ said this is an important liquidity zone. And then eventually it became a pivot high, probably around here. This is a pivot high, this one. And yeah, these two were volume significant. And starting at this moment here, Liquidity IQ is saying, hey, this was important support. Now it's important resistance. So it's a rare overlap, but that's important to keep in mind. And look what's happening. We just anticipated this. Everything's going up. It didn't go further down. We are far away from the zone. And now all the shorts who shorted late, which we could have been, we didn't fall for it. But, excuse me. All the shorts that went short, now they're all having to cover. And they're all probably looking up at this zone here. If they have Liquidity IQ, they're looking at old pivots, thinking, hey, oh crap, what if we do go up to 82? So we're going to be patient and wait to see what happens there. Let's look.
Patience is the name of the game. Also for MES, it's continuing higher, but we may see, if you see the retracement, we're gonna wait. We're not gonna enter now. We want to see this perfect opportunity, which once again will give us the perfect reward to risk ratio that we're looking for. So
definitely. And let's hop over and see copper. Okay, it's still holding these little pivot low. It's not showing any signs of slowing down just yet. We're still grinding upwards. And another thing to anticipate is, it's good to think in terms of what are short traders thinking and what are long traders thinking around these important levels. Shorts, we're expecting us to continue downwards. We got this huge move up. Everybody who is long from back here is kind of like, they're thanking their good graces that we had this huge move up. And, maybe they didn't get out, or they held on too long. A lot of them might be selling. Once we come back up to these pivot highs, they're worried, hey, we're going to go back down again. But the shorts like us, if it does go higher, it's probably going to blast through this because they're panicking. They want to cover their shorts. So it's a good way to think of market psychology. Is think about what the opposite direction trader is doing to help anticipate movement. So silver had a nice little bounce off of here. Oil, okay. Everything's kind of slowing down a little bit, getting less and less volatility. Maybe we'll see a retrace down to here on ES and NQ. Yeah, Bitcoin is not surviving. It is going downwards. And sorry, go ahead, Daniel.
No, I think the retrace is happening exactly as anticipated. And I'm going to quickly look at what's happening to natural gas too, as we had the breakdown there.
Do you want to share your screen, Daniel?
Yeah, I can share my screen. 1 second. All right. Just take over for a second.
Okay, stop sharing.
Yeah. Okay, so this is natural gas, and as you can see here, I am connected to my TraderWeight account on Apex. Nice day today. I just started this challenge this morning. Made $351, mostly on my gold trade. A beautiful trade on the zone break retrace, my favorite setup. Hopefully, we're going to see this setup exactly on MES today as well. But on natural gas, look, we had this zone break, and is this the right time frame? Yeah, zone break happened. Now retracement may be in progress, and if it does, a nice opportunity to go short this level. So we're going to wait here as well. Switching back to,
looked like that retrace might happen, on natural gas.
On MES. Oh, yeah, but also look at MNQ and MES. Oh, look, maybe I think, Nicholas, this could be a nice opportunity to go long. And actually, I'm going to execute this trade right now here in my TraderWeight Apex account. I do like what I'm seeing here. I'm going to quickly check whether MNQ or MES is the right play to do. Yeah, look at price going down here. Just see until Liquidity IQ is recalculated. Just a second. There we go. Yeah, we're retracing back into this broken zone. So I think I'm going to use, zoom out all. Yeah, MES to place a limit order to enter long into this trade with a stop loss just below here. So I'm gonna, and this may be the side effects actually of the FOMC meetings. So maybe
my alert just went off to that retrace alert on ES. Yeah, maybe we would wait. I would wait for it to go even below the resistance line. Because it's a pretty big red candle there.
And I do think that this could be a side effect of what Powell is saying right now in his speech. So since we are aware of this meeting, let's just be a bit more careful of
Daniel, sorry to cut you off here. Do you mind if I share my screen for a sec? I'm going to close out our copper trade.
Go for it.
Just because we're nearing the end of the session. So we're here. We're up $72, $75. I don't want to risk it. It's very bullish. We closed the trade. So we're up 146. Okay, I'm stopping sharing my screen.
Okay, thanks, Guy. Thanks, Nicholas. Okay, so guys, by the way, as I'm sharing my screen again, if you have questions, now is the time to ask. I'll be happy to cover any question. And yeah, things that seem to slow down a little bit. I'm still gonna go ahead and place a limit order to enter long 5 contracts on MES. At a price of 4,645. Okay, so limit order, we are 8 ticks away. And I'll place my stop just below here. Betting on the fact that this bullish move at 42, I guess, 4,642. All right. So at this level, risking $118, but the idea is to gain, of course, if this bullish move continues. So I'm going to place the order. Oops, 45, this level here. Yeah, let it retrace, and then stop loss all the way down here. So place order, enter by limit order. And this is a nice way to ensure that you will get the price you want, and more importantly, you will get the reward to risk ratio that you want. Because a lot of trading is about the exit. So if I get stopped out, I want to, lose a little bit if I'm right. I want to just get in at the right price, at the best price that I think I can get. If I don't get it, so be it. I miss out on the trade. New trades are always around the corner. But if things work out, then oops. No, I just made a mistake here. How can I cancel this? There we go. I've got to go back to the original entry price here at 4,645. So let's see how this will plan out. And just to revisit maybe my gold trade from earlier today, which worked out beautifully. So it was gold over here. Oh, and gold is actually, this is another nice opportunity. I can see it already. It's gonna retest again that broken resistance zone, as you can see here. Actually, just here, this was the resistance zone that I looked at. Actually, down here. Actually, what I did this morning is I took a long trade as things broke above this resistance zone. It retraced back here, and this is where I entered long into this gold trade. Originally with 10 contracts. I booked profits fairly early on, closed out 5, and I let the other one right up all the way to about here, and then got stopped out on my trading stop. But if we see this retrace once again here, we may see another opportunity to enter long in gold, especially since gold has been bullish on Amiraj for quite some time now, since actually yesterday. All the way bullish, a nice smooth upwards run. It could be a nice opportunity to enter long gold here as well.
Daniel, do you want to open up silver right now?
Yes.
So okay, silver, I think we've already missed out on another $50 on copper, but look at that bounce happening on silver. That's exactly what we anticipate. And look, it's totally losing those pivots down there. It's not looking good. So it's very good. And if you see there, look at that rounding of those couple liquidity captures. It rounds the corner and comes down. If we hop over to MHG real quick, please. Check that out. Same thing. We're going to see that rounding with those liquidity captures. We exited below this actually because it's so bullish. It's just risky to be holding it here. But yeah, the same thing happened.
But do you see, guys, how awesome these levels work out? And you just have to have the guts to enter into the opposite sensed market direction. So price is going up, but you just have to trust on the fact that, hey, these levels do have significance, especially when combined with liquidity captures and that reversal may be happening. And the beauty about these trades is that you will put your stop, if planned out correctly, right at those above those zones for a very small risk, but potentially a big reward. Just checking out my MES trade. So we did get our fill. We do see the retrace here. We might, we'll see what's going to happen. Where do we put our stop? Oh, this is MNQ. MES is here. See a bit of
That's a nice stop. That's a nice wide stop.
Yeah. So, yeah, especially since I guess the Powell speech is still in progress. We're down $12. No big deal. This is a huge account, $100,000 account on the prop. This is not going to hurt me by any means or bring me close to my drawdown limit. As you know, with prop accounts, you need to stay within your limits. We will plan a session for the future where we're going to show you how we can trade smartly these prop challenges to increase our chances to pass these challenges.
Daniel, we have a couple questions. I'm just going to tell Robert, I'm not sure if you answered Daniel, but I think we'll get to this right at the end, where he asked, is Liquidity IQ a separate product from the dashboard? And a question from Doug, would you please repeat your commentary on how support zones or resistance zones are established with pivots in Liquidity IQ? So what Liquidity IQ does is depending on your chart reference time frame, right now we're on the 5-minute, our reference time frame is the 30-minute. What it does is it takes your reference time frame, the 30-minute, and then it looks at 4 or 5, depending on the time frame you select. It has a different algorithm. It looks at 4 or 5 time frames higher than your reference. So if we selected the 30, it's looking at something like the 45-minute, the 1 hour, the 2 hour, and the 170-minute, something like this. And it keeps track on all of those time frames in an array, or in a list. Where did the pivots happen? Or where were their pivot highs and pivot lows across each time frame? Then it conglomerates them and finds out which ones lined up across each of those higher time frames. So was there a pivot on the 60 that also co-aligns or aligns with the pivot that was on the 120-minute? And it keeps track of these pivots that are congruent across these different higher time frames. And then it grades them by how much trading volume was occurring at them. So it's not just pivots, it's what we call volume significant pivots. So it's finding the pivots where there was a lot of liquidity, and that's why it's called Liquidity IQ. And that's why it's smarter than just having, some pivot indicator. It's multi-time frame, it's taking into account volume. It's kind of like a pivot volume profile. And yeah, and then we have all these different signals based on those levels, and you can see just how significant they are.
And just to make sure it's all clear, a pivot high is something like this. A price spikes up, makes a high, and then goes down. Like here again, this is a pivot high. And these are used to calculate our resistance levels. And for support, it needs to be a pivot low, something like this. Price goes down and goes up again, goes down, goes up again. These are pivot lows. And what the indicator does, it merges that information from multiple time frames to calculate the levels and that it shows on the chart. All right, perfect. Guys, any other questions? Let's see what we have.
That retrace is still in play there on ES and NQ. It's still within the volatility box.
It's still there. It's grinding. Yeah. We don't know what's going to happen, of course, but we do have this tight stop. If we lose, I don't know, $100. But if this takes off, we're in to gain a significant amount. So, yeah. And the beauty of this is we were patient to wait for our limit entry. If I had entered at market right when it stayed here, I would have been negative right now. But since I was waiting for price to come down to the middle of the box, the price I actually wanted, I'm actually a bit in the profit. I entered right here at the low end of this box, and my stop being here. So if I get stopped out, not the end of the world. But of course, if things take off, I'm in for a big profit. So you can do a lot with these limit entries to improve your reward to risk ratio.
All right. Thanks, Doug. Yeah, that's a good algorithm. It does seem to work with Liquidity IQ.
And let me quickly go back one more time to my natural gas trade just to see. Oops. Oh, and we also had soy meals. This is something I wanted to revisit to see if we get the retrace. Yeah, look at this. It stopped. Oh man, this is the well, it's not the cleanest setup. We did have our zone break here. It retraced back into the broken zone. I would have liked to see a bit more of a downwards move and then the retrace, just make it a bit cleaner.
I don't like that liquidity capture back there. The one back there. A little bit further back when it tested it.
This one? Yeah.
Behind there, even the liquidity capture on that pivot low way back at the start of the chart. This looks like a level that has a lot of support.
Yeah, exactly. Could be. So this may prevent price from dropping further down. And let me just quickly look at soy meals, perhaps to round off the trading session today. Yeah, no, that retracement did not happen yet. We are well below support. But if this one comes back up, guys, this could be a textbook setup, because I like to have it clean setup where we actually were well below the broken zone, then the retracement, and then you go short with a stop right above the broken zone. But we're not here yet. All right, guys, so this ends, pretty much rounds up our trading session. We're 1 hour and 28 minutes, and I'm going to keep an eye on this long trade for MES. Maybe let you guys know how this panned out in our next Lunch and Learn session. There's one thing I'd like to mention. You will all get an email today with the recording of today's session, so look out for this. And tomorrow, have our options Kickstarter meeting at 12 p.m. Eastern with the option professor. You will also get an invite for this later on today. So please look out for this. It's going to be a different type of trading, but nonetheless, going to be very interesting because the option professor, Jim Kenny, has so much to say, and he's just a funny guy, and he knows so much about options trading. So it's a great opportunity to pick his brain, to ask questions, and to learn more about our options alert service. And one quick reminder, guys, if you want to check out Apex, as mentioned, I really enjoy this company. We do have the 80% special going on. Simply go to tradingindicators.com/Apex. It should pre-populate the coupon code for you. If not, you can find it in the chat. I'm going to put it back one more time, which will get you 80% off your Apex charges. So let me just put this in quickly into the chat. There we go.
I've already put it there, Daniel, with the link.
Okay. Oh, thanks. Okay, perfect. All right. So that's it. Let me just quickly look one more time into the
Robert's question there.
Oh, yeah, we did forget about Robert. Okay. So yeah, Robert, your question was, is the Liquidity IQ indicator the same as our Liquidity View dashboard? No, it's not the same. So Liquidity IQ is really our chart indicator, which you can use for TradingView, as you've done here, or for NinjaTrader, or for Wave, or for some other trading platforms. It's always geared towards a trading platform. It's so if you buy Liquidity IQ, it's a lifetime purchase. You make the purchase, it's yours forever. You can use it as long as you want. It will never expire. For Liquidity View, it's a bit different. This is our dashboard. So let me just go back to my browser here. My Zoom thing is in the middle. There we go, wrong window. So let me go here to our dashboard, which is view.tradingindicators.com. So this is our own platform, and it is geared to allow you to scan for swing traded option trade opportunities. We're going to mention this tomorrow as well in our option session, how you can use the dashboard to do your research to find interesting option trades. And for example, if you go to the dashboard here, you can find, you can scan through stocks of interest and then formulate your option trades around it. And one thing I did yesterday is I showed this scan here where I looked for stocks which have earnings coming up in the next week. Actually, I'm going to put this to 2 weeks, and they're optionable. And then I, for example, found a trade or an idea, which was, just quickly find it here, JBHT, Hunt Transport. So you click on it, and it will open up your chart. And you can see it's kind of hovering in the support area here, but earnings, are coming on the 16th. And one trade that comes to mind when earnings are coming up, because earnings may shake the market, price may move a lot, is a strangle options trade, especially if the options are relatively cheap right now. We can see this here as low volatility, meaning option contracts are typically priced a bit less. So because the higher the volatility, the more expensive they get. So a strangle trade where you buy a call contract and a put contract at the same time will be profitable, I should say, when the price moves significantly. And we anticipate, for example, that because earnings are coming out, that price will do move for the symbol once the earnings are out. We still are about a week out for the earnings, but if it happens, we might be profitable on this options trade. And how this works exactly, Robert, we're going to see tomorrow in our options Kickstarter webinar. And one cool thing here is, for the dashboard, you can actually switch to a live chart just by clicking this button here. And you can see, well, even on the live chart, this stock is not moving much. So I'm going to go to the 50-minute here. It's still in that range here. It's consolidating, grinding downwards a little bit, but we're waiting for the earnings to come up. Hopefully see a big move, and then our options trade alert that we put out will be profitable. All right, so one more check here on my...
One important distinction too, Dan, I think to point out between dashboard and the indicator is dashboard right now is targeted towards swing trading and the daily time frame. Whereas once you got the indicator itself, you can apply that to any chart, any time frame you want.
Exactly. All right, perfect, guys. So let me see if there are any last minute questions. I don't see any, so I hope everything has been answered. It's been fun. I hope you guys also had some fun today. And let's see how this MES trade pans out. We're a bit in a drawdown right now. I haven't given up on it yet. Sometimes just have to be patient. And yeah, that's it. I'm going to recap this a little bit in our next Lunch and Learn session on Tuesday at 12 p.m. Eastern. Hopefully see you guys all then, and maybe tomorrow at our 12 p.m. Eastern option session. All right, guys. Until then, I hope you liked it. Talk to you guys soon. Thanks, Nicholas.